What a crazy week for uranium, guys. Everything's crashing. This shouldn't surprise us because at the beginning of the year, I talked about how there are potential outcomes for the uranium space. We talked about how there's going to be a massive scare in all risk assets, including uranium, when the Federal Reserve is threatening to raise interest rates in a slowing economy. And it's exactly what's happening now. But what I also said back then was that they're going to reverse course and it's going to be potentially a buying opportunity, right? If they're reversing course, then what's causing this market to crash is going to be taken away, right? So the thought process is that they can reverse course, and we'll dig into kind of the economic impacts of that. So first, price action over the last week. North Shore Global Uranium Mining ETF down a whopping 10.66%. In line with what seems to be its best friend, the ARK Innovation ETF down 9.94%. I don't have a problem with it trading with this because, first of all, you want to be investing in the future of the world, right? You want to be investing in innovation and the best technology. And if uranium is trading alongside that, it does prove that it is a future growth sector and that it has a lot of promise and a lot of growth ahead. One could argue that it's better than ARK because it has hard assets underlying it and it has supply-demand fundamentals, right? There's a supply crunch going on, which ARK can't say it has. So you could argue that uranium will outperform long-term because of the supply-demand fundamentals, because of the massive growth. But for now, I have no problem with it trading with innovation stocks. So here's this awesome piece out of Axios showing the total dollars invested in uranium projected. The growing financial support for nuclear energy, here are global investments in nuclear power. You can just see it like from 2018 to 2021, it went up 30%, on an annual basis. So 33 billion to 44 billion. And it's just going to grow, stay at this high level for the next 2 years. There are 52 reactors under construction across 19 countries that, once completed, will add 54 gigawatts of installed capacity. So that is just bullish as usual, right? And we're waiting for the supply crunch to really kick in once this stuff starts to come online. The firm that put this together points out that reactor construction is a year-long process. So the near term, a decline in capacity is likely because some old plants are shutting down. It is true that some old plants are shutting down, but what we've talked about in previous episodes is that for everyone that shut down, a new one is pretty much coming online, right? And this doesn't even factor in small modular reactors offsetting the declining power plants. Now, small modular reactors are away, but they are the future and they're extremely exciting. Here's an article. Deal signed for nuclear to power Russian gold mine. Gold mines take up so much energy, right? The agreement signed by Rosatom and Celidar covers the supply and consumption of energy from a small modular reactor, nuclear power plant to develop this gold deposit in Russia. The deal is for 40 years of electrical power supply starting from mid-2028, guys. So this is just an incredible use case for uranium. Everyone realizes how groundbreaking this is. And once the supply demand equals out, we're talking years out. Once all these mines that you're investing in now become huge and are just pumping out uranium, the fuel supply can get cheap. Okay, it can get cheap in terms of the energy output we're talking about. Not saying the spot price will be lower than where it is now, but just saying that based on the output of energy, it's going to be cheap. So we're talking SMRs all around the world powering massive projects and just insane output. So it is a really interesting thought process. What happens to the mining industry when you can just plop an SMR down and just dig away with free, cheap energy? Not free, but dirt cheap energy, because uranium isn't exactly scarce. But currently it's scarce with the above ground supplies being absolutely pathetic given the amount of demand that's coming. More bullish news. The majority of US states pursue nuclear power for emission cuts. World's biggest economy drives everything, right? Absolutely massive. So if the majority of US states are pursuing nuclear power, that's extremely bullish. So we have the SMRs and we have massive government support. Here's an interesting piece out of the Daily Beast talking about SMRs. seems that the right and the left can agree on nuclear power. When it comes to the future of nuclear energy, one kind of nuclear reactor that's gotten a lot of attention in the recent years is called small modular reactors. The name suggests these reactors are designed to be a fraction of the size of traditional nuclear reactors. They're 90% smaller. They'll have fewer mechanical parts, operate on less radioactive material, and produce less heat, and could operate underground with passive cooling systems. So it's just, imagine a world where these are kind of plopped everywhere. They're safer, and you just get amazing cheap energy churned out. And like I just said, I want to stress that it's going to take a much higher uranium spot price to incentivize this type of mass uranium production. It's not happening at $40 per pound or whatever it is now. It's just not. And that is the uranium story. That is why investing in it makes sense. And that's why on days like today, where it's crashing, if you are bullish uranium, then you can consider potentially buying it. Obviously not investment advice. Also, one thing I wanted to point out, because obviously this market is completely macro driven at this point. Like, it's just so obvious. It's all based on the Federal Reserve threatening to raise interest rates. We talked about it's causing this crash. But let's talk about macroeconomics. Why are they threatening to raise interest rates? So the Fed is raising interest rates. They're threatening to raise interest rates because they're worried about inflation. So first, let's talk about inflation. But the reality is they're not going to be able to. You can already tell that there's economic depression happening as we speak. Stocks are crashing. Baby boomers' retirement accounts cannot go down by 20% and expect anyone to feel wealthy. It's the opposite of the wealth effect, when all these guys are going to start tightening their wallets because their stock accounts aren't worth as much. How can they retire comfortably if that happens? They can't. So currently, because of the Federal Reserve wanting to stamp down inflation and threaten to raise rates, it is successfully stamping down inflation because people are freaking out, right? And if people feel poor, no one's spending. So let's just talk about inflation. Then we'll talk about like the supply chain disruption story because of COVID. Here's Darius Dale. I had him on the show. He's great and just really looks into the data, right? And so he put out this amazing chart. This is the inflation forecast. Okay. So obviously in December 21, it's just all-time high, ridiculously high, right? And that's kind of the scare we're talking about with inflation. He is projecting across every model to have a rollover, and his models are generally pretty accurate. So just on a rate of change basis, the forward inflation expectations are falling. And so if this comes to fruition, I'm not saying it necessarily will, but if it does, then we're at peak inflation and the Federal Reserve won't even need to raise interest rates, even though obviously that's a different conversation. Should they not? They're totally manipulating the market. That ship sailed, right? But if inflation goes down, then the urgent need for them to raise interest rates will also go down. And so that's his forecast. Not a lot of people are talking about this. His data is extremely extensive. Okay. So it's not, there's zero emotion in this. A lot of inflation people think that we're having a hyperinflationary collapse right now. But is that based on data? I don't know. His, I know, is. So we have this projection, which is bullish for the stocks, which are crashing because of the inflation scare. The other side of that argument is that COVID supply chain disruptions are going absolutely nowhere. Things are getting worse. COVID is going up. People are calling out sick. If that continues to happen, if vaccine mandates happen, which we know they're kind of going down around the world slightly, right? In the UK, the United States Supreme Court just shut it down. So if the COVID supply chain disruptions get worse, then obviously this just can't occur. Supply is going to go down and demand for all this stuff is going to go up. But personally, in the next coming months, I could probably see inflation spiking in the next coming months, throughout flu season, because COVID is going to pick up. People are going to call out sick. There's a truck driver shortage problem, which I talked about with Nick Barishev in my interview on Friday. And so if these shortages occur, then inflation expectations are just going to go through the roof. So there's something you just got to stay on top of. Unfortunately, it's all data dependent. But if inflation truly rolls over, which Darius Dale, based on his true economic data, is forecasting, then the immediate need to raise interest rates will not exist. and the Federal Reserve won't have to raise. They won't have the excuse to raise. And we can already tell based on the crashing markets that they're probably not going to raise. And so risk assets, as soon as they reverse course, are going to spike, including uranium. We've talked about the bullish fundamentals. We've looked at the news stories. It's all exciting. This depression in uranium spot price is nothing but bullish for the supply demand crunch. And so people aren't going to produce uranium in this type of environment, right? They're even less likely to bring their mines online. So this type of softness just squeezes the supply crunch and makes it worse and worse and worse. You also have this brought trust taking it off the market. So all in all, the screws are tightening and the uranium market fundamentals are just as bullish, and it's just the rubber band is getting squeezed and it's getting better and better and better fundamentally. It's just getting these macroeconomic headaches out of the way. We'll stay on top of it all. Thank you guys for watching. Very exciting times. This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky and you can lose lots of money in them.